What do you think after you hear these warnings and concerns?
I'm happy. I'm delighted to hear that the bears are still growling. It's when everybody's bullish that I get nervous. And right now, this bull market, I think, is bright and it is shiny. And I think it continues, mostly because there's no recession. Waiting for recessions like waiting for Godot never shows up. And I think that earnings are starting to pick up as profit margins are starting to improve. And I see all these bears are looking back to the past. I'm looking also back to the past, and I see a similarity between the 2020s and the 1920s. So I view this as the beginning of the roaring 2020s. It started at the beginning of the decade, but the pandemic got in the way.
But, Ed, I think everyone's bullish. I mean, maybe you can capture it scientifically better than I can, so I'll just use kind of anecdotal. But, I mean, you get laughed at now if you're bearish, right? People are like, what are you talking about? Let's look at the fear and greed index. The last time I checked, we were pretty high up there. Yeah, extreme greed, 82.
Right. Well, look, it's still a baby bull market. It just really got started on October 12th of last year. And at first, it was very broad-based. Then we had the banking crisis, and it narrowed as the financials got whacked, and everybody ran into the mega cap 8. And then the bears said, well, it's too narrow a market, and it's going to take a dive. And instead, what happened is the market's starting to broaden out. I think the fact that it's broadening out is proof positive that we're actually in a bull market, and people are getting more optimistic about the future. I mean, the future looks pretty good to me.
Well, okay, I'm going to ask you one more, and then, Alan, I'm going to turn to you. And it's wonky, but it's not. I mean, what about jobless claims? They don't get any respect.
Well, we've had 2 weeks where they're up, and we've certainly had plenty of announcements over the past 6 months by companies that they're cutting back on unemployment. But on the other hand, if you look at the job openings surveys, and it's not just the JOLTS report, there's also something like that in the Consumer Confidence Report, and there's something like that in the National Federation of Independent Business survey of small business owners, and they're all saying they're looking for workers. So I think that's actually very telling that there's some churn going on in the market, and that's what we're seeing with initial claim. But all in all, the job market remains really quite solid. It's probably slowing, but that would be welcome news for the stock market.
Alan, are you as bullish as Ed is right now?
First of all, Ed, it's great to see you. A big fan of your work. I am bullish, maybe not quite as bullish, but I think a lot of what Ed said makes a ton of sense. I think there's a lot of folks that have just been frightened out of this market, and it's easy to be afraid when waiting pays you 5%. Like cash yields are super high, bond yields are super high. And so, I can see why folks are bringing up 2008 because it's comfortable to sit in cash, but you're missing out. There's a huge opportunity cost to sitting around in cash. I am cautious, but I'm optimistic. I do think that, we're in a really strong economy. The biggest thing I'm concerned about, really, it's the Fed sort of overreacting. Mm-hmm. We're seeing some news that looks good. While we celebrate that news, we also kind of worry that the Fed is going to roll up their sleeves and raise interest rates some more, which is probably one of our biggest worries.
Yeah, and Alan, actually, I think you're echoing what some of the traders are worried about today. And they see, well, if crude's bottomed and if some of the soft commodities are rising because of drought issues or what have could we all of a sudden be hitting an inflection point where inflation starts to pick up again? And can you imagine what a tighter Fed would do there?
Oh, we already know what the Fed's going to do, right? The majority of the Fed governors right now are, would like to see rates go higher 2 more times this year, which, really shocked a lot of folks. But you notice the market didn't really react because I think there's a disconnect between what the market views will happen and what the Fed says is going to happen. And this happens from time to time. The Fed has to talk. They have to use their bully pulpit to be able to talk markets down, to talk inflation expectations down. We just hope that they don't back it up with actual rate hikes. I think we've done a lot in a short period of time. And, with a very fragile banking system, we don't want to keep seeing rates go higher and higher.
I know you probably feel good about Adobe, Oracle, Salesforce, Intuit. These are a lot of the Allan Boomer stocks that have also been doing quite nicely lately. Ed, let me just ask you about your price target at this point, as everyone's kind of scrambling to raise them. And a point that others have made, a couple on the show lately, about earnings is that they've, expectations or estimates have actually fallen since January. So I'm curious if you can kind of add that all together for us.
Yeah, well, my target really since the end of last year for this year has been 4,600. So we're getting there a little faster than I would have expected. And I would prefer that it doesn't get there too quickly, because then I do have to make a decision of, do I leave it there, or do I raise it, do I lower it? But I think that on the earnings side, we are on the high side of earnings, mostly because the earnings recession we've had was really a very soft one. And it was really all related to the profit margin shrinking. And I see that companies are starting to scramble here to increase their productivity, to figure out how to make things without having to just constantly raise prices and wages. And I think consumers are starting to resist some of the price increases. So you put it all together, I think inflation is moderating. I think the cost side of the equation for companies is improving, moderating. And therefore, I think profit margins are probably bottomed. And that'll certainly have to give us a rebound in earnings, in my opinion.